And what you generally see is that during these major bull runs, all this new capital comes into the space, and some of those longer term holders start to sell into that strength. Basically, they experience 5x, 10x, 20x gains in some cases. They have these life-changing amounts of capital appreciation. They want to rebalance. They want to consume. And so they distribute into some of that strength. And a lot of that new capital pours in. And then you generally see during these more consolidation type of markets, these bear markets, you generally see the reverse. You have the longer term, more knowledgeable, higher conviction holders go back to, they become a larger and larger share of the market over time. And so what we see now is that we're back in this distribution cycle where, during the early kind of bullish period of 2021 and, the whole phase there, those longer duration holders are willing to sell into that new strength. But then throughout this consolidation that we've been in for the better part of a year, those longer term hands have not been willing to sell at these prices. Many of them are still accumulating at these prices, dollar cost averaging. Coins are continuing to go from kind of those faster money hands or those weaker hands into those longer duration, stronger, less liquid hands. And so that's generally what sets up kind of the next cycle. You have the macro events. You have basically, you can separate it into demand and supply. So on demand, you have what we covered before, things like risk on or risk off periods, how much liquidity is in the macro environment. Those types of factors can determine how much capital comes into the space or leaves the space. Meanwhile, the other side of it is the supply side. How much of the existing coin base is available for liquid purchase versus how much is locked up into very strong or illiquid hands. And what's made this cycle rather unique is that, in these prior periods when you had these peaks in demand, that was the top of the cycle. Whereas actually in this time so far, we hit a slight new high later in 2021, not because demand was as high as early 2021, but because you had moderate demand and really, really tight supply. And so there's really two sides of the market to keep monitoring. Basically different analysts, I think, focus maybe too much on just the demand side or just the supply side. And when we put both together, basically what we're seeing is right now we're in kind of a weak period for Bitcoin demand, as you would expect from economic deceleration, liquidity being pulled from the market, while the supply side is one of the most bullish setups we've seen. And so that kind of can segment our expectations about maybe the longer term outlook versus that intermediate term uncertainty. This is a chart from Yuri and Timmer of Fidelity. I think he's been doing really great coverage of this space. And so he has a demand curve model. Basically, you can model Bitcoin as though it's a network effect, as though it's similar to internet adoption or mobile phone adoption. And so you have this kind of, the monetization of this asset over time, that this asset acquiring a monetary premium. And so you occasionally go, way above the demand curve. You get that, you get momentum traders jumping on board. It's not like this, it's not this very smooth adoption, but you go through these periods of fast or quick adoption. You can kind of model it over time. And of course, we can't predict the future, how fast things could go, what sort of inflection points, what sort of geopolitical events could accelerate or decelerate that. But it shows that, based on that model, we're towards kind of the value side of that. We're not necessarily in capitulation mode. The last time we had a capitulation was March 2020 during the COVID crash. The prior time was that late 2018 period, which was when the Fed was trying to tighten into declining PMIs, declining economic acceleration. We absolutely could have a lower capitulation, but I would say that we're already kind of in what has historically at least been a valuation, kind of an accumulation phase, kind of a value opportunity. And you can look at all sorts of indicators like dormancy. It's basically another way of measuring are long-term holders selling their coins or not. And most indicators keep showing the supply side remains very tight. And so I think we're in this, kind of to repeat the point that I think we have to manage our expectations maybe about the next 12 to 18 months. Understand that Bitcoin is treated as a risk-on asset by many pools of capital, but that the long-term story looks very favorable now, and that if people basically are looking to get into the space, the network just went through a 50% plus correction. I think that the supply side is still kind of long-term bullish.